if you're a young founder who is doing that for the first time, you might get scared away. And investors expect you to be coachable, but they also expect you to be the captain of your ship. And I would like to hear maybe your tip to founders who are in between the two states. How do you maintain balance in this situation?
First of all, for the investor side, I think it's a trap. I don't think investors can coach founders. Founders coach themselves.
Welcome back to the Recursive podcast. During our last visit in Athens, we talked to Thaleia Misailidou, a prominent figure in the venture capital industry in Greece. And she's an active angel investor passionate about supporting founders in the deep tech space. Thaleia is also a co-founder of the Tech Finance Network, a professional community dedicated to supporting Greek startups. And in this episode, we talked about the importance of women in VC, angel investing challenges, and the growth of the Greek VC ecosystem. Let's dive in. I was doing research. I saw that you were in a completely different ecosystem before.
That is true.
Yeah. So you were part of a boutique advisory in Munich. You were also in one of the big ones at Merrill Lynch.
I used to be a villain. I'm joking.
I mean, I wouldn't say that you were on the dark side, but okay, maybe you suggested it in a way. Now, what brought you or what made you transition from investment banking to the startup ecosystem and also to venture capital?
Yeah, so going even further back, I guess. So I sort of always knew I wanted to do VC. From the first time I heard the definition, I was like, wow, this sounds interesting.
When did you hear the definition?
In the National Technical University of Athens, actually. We did sort of a business plan competition. So that was the first time, I heard what a startup is, fast trajectory, like the whole journey, VC. So I was very impressed. And even when I went to Imperial, I was in the entrepreneurship club, the venture capital club of Imperial. So I always knew I wanted to do that. But on the other hand, I sort of wanted to get the big corporate experience. I wanted this sort of bulge bracket bank and large M&A transactions. I wanted to go through that circle first before I end up in VC, because there are different routes into VC.
Yeah.
One of them is banking, is investment banking and M&A. And I must admit, I have found it useful in my VC career, this sort of exit focus. There's obviously the founder path as well, which is equally exciting, if not more. But yeah, for me, it was easier to follow this sort of, international bank, Merrill Lynch first. And then as soon as the opportunity came up to join Marathon Venture Capital, at the time it was an emerging fund manager in Greece. And mind you, that was back in 2017. So the Greek startup ecosystem was very different back then than it is today. We've come a very long way. But it's been very exciting to experience this journey from the very beginning. And it was great because it was also an emerging fund manager. Yeah. So I got to experience the journey of, it was a fund, but it was still like a startup. It was still from the beginning. So it was super interesting.
Yeah. You just referred to that, and let me ask you, so 2017, that's okay. I mean, it's not 10 years, but
it's almost 10 years.
Almost 10 years. Yeah. Can you share from your perspective the evolution of the Greek startup ecosystem from 2017 until today? Which are actually the most important milestones? And
So 2017, when Marathon started, there was only one other venture capital in Greece, Venture Friends. That was it. That was the two funds. I think the very important milestone that happened around that time, 2018, was Equifund. It was the first Equifund, an initiative by the European Investment Fund, led by the government here in Greece to increase funding in the ecosystem. And this did fuel growth of startups and maturity in founders as well. It was also part of the fund manager's mission, I would say, not job, to sort of educate the ecosystem as well, not just invest and create returns, but everyone was genuinely very interested in advancing the ecosystem as a whole, which I think was very important through events, collaborative opportunities. That's where the Tech Finance Network was born as well. Yes. One of the communities I started. So it's been a course of a combination of different things that led to today, but I think the main milestone that changed things was Equifund. Was Equifund in 2018, where 4 funds spurred up.
Yeah.
And then another milestone, more recent, is the involvement of HDBI, so the Hellenic Development Bank of Investments. They sort of took reins in managing public money into funds and then flowing into startups. And at that point, even more funds came up. So today in Greece, we cover different stages. Angels, like myself, could have emerged through the ecosystem in a natural way. Like I didn't have the capacity to be an angel before, I do now. And then I'm investing back in the ecosystem. And also we have funds covering different stages. So there's all the typical seed stage funds, but then there's a whole range of funds below them, doing the pre-seed, doing the idea stage. So basically today we have come at a place where a founder in Greece with an idea, Greece is a very good place to be in, to get funding when you have a good idea. Or when you have a good background in something specific, it's a good place to be in terms of finding capital.
How do you see the contribution now on the side of funds like Marathon VC and also of the angel networks which are here, so that you achieve the next growth stage of the ecosystem, the next development and evolution stage of the ecosystem? What is necessary to be done on the side of finance?
Yes, I think it's important, and that's what has driven Greece to where it has come. That everyone, has a genuine interest in advancing the ecosystem. So you do sort of inorganically assume this role that is beyond investing. That's also educating founders, basically, on different matters, not just how to get capital, but when to get capital. Or when are you ready to actually raise? You may even have available funds to raise from. Yeah. But it still might not be in the founder's best interest to raise this early, for example. So there's everyone here, every fund in Greece, every sort of collaborative community, everyone's is trying to sort of educate founders. And I think that themselves by now, we are at a very good stage that they know how to navigate, fundraising, different funds, different strategies. But I think we've also made an effort to be outward looking. Yeah. So to be international day one, to think sales and clients first and funding second, to also look outside of Greece for capital, not only for sales. So I think those were the most important, ideas that sort of we tried to distill into founders from the beginning of, I would say, 2017 to today.
Now, you have a background also in mechanical engineering.
Yep.
How is this helping you navigate your investment career, both as an angel but also part of a VC? Yeah.
I think it has affected me throughout, even in M&A, even before that. Yeah. I was in the industrials team, for example, in Merrill Lynch. Okay. So, and within Marathon, while I was working there, I guess it's not random that the investment that I chose to do was augment agriculture, which was it was a hardware-enabled SaaS. So it actually had hardware. It was an agriculture solution, so a very, industrial sort of sector. Yeah. I would say that even today as an angel again, the fact that I'm drawn to deep tech, the fact that hardware is sexier now than it used to be for investment, than it used to be like 5 years ago. But I've been naturally drawn to hardware from the beginning of my investing career. And potentially it is because it sounds more familiar to me. So it's easier for me to understand the hardware solution. It's easier for me to understand deep tech that affects industrials rather than, let's say, a simple SaaS or a consumer business.
I would like also to ask you about your time at Merrill Lynch, working on amazing billion-dollar IPOs and very impressive M&A deals. How these experiences influence the way you look at the life of a startup, which
usually, and if it's a successful one, will end up in one of these two exit scenarios. Yeah, so they will be aiming for an exit to a strategic investor or to an IPO. And now you can probably even better reverse engineer what needs to happen beforehand. I don't know. How is it looking at that from today's perspective?
Because I invest in the very early stages, the seed and the pre-seed stages, I think founders, for the beginning at least, should think value add to customer, value proposition to customer, and should stay away from, M&A scenario making, let's say. So for these stages, it's not as relevant because it's too soon. Like first you need to actually produce some value and then you can be bought and paid for. But it has affected my way of thinking. The way that we modeled, it was much more detailed, definitely beyond the scope in the billion-dollar transactions. But the way we modeled synergies, it has really resonated with me why someone buys a company in the first place, to create synergies and to get strategic value from that. So I would say what I've learned that I carry with me is looking at buyers from a strategic point of view and sort of positioning yourself. So once you've created value for your users, then it does become interesting to see. In all these, filings that the public companies have, they declare their strategy already. So you know what their next 5 to 10 years, what they're planning for.
Yeah.
So at that point, you can see where your solution would fit strategically, would make a difference. That's what strategically here means. Would make a difference to an industrial's, for example, ability to hit their 5-year goal or their 10-year goal. So in the example of Augmenta, which was acquired by CNH Industrial, they had a clear mandate to go to self-driving, automation, actuation. So at that point, it was clear why would they buy Augmenta and also how important Augmenta was with them. So I find it interesting to be able to model where this acquirer to buy this startup, what would that mean for their bottom line? And that's important for startups because that's how you know how much you're worth.
Would you advise startups also to think about the problems that, let's say, industrials or corporations are trying to solve before they develop their solution? Is that a helpful way to think about value? Because we know that in our region, most of the companies are in the B2B space. Yeah. So they are creating values and they are quite often targeting enterprise customers.
Yeah.
So you need to understand how these structures and these cultures are thinking and how they serve the market so that you can provide value to them. And that's maybe also the exit route. So at what stage do founders need to start thinking about it, in your opinion?
It's also, your question is part of the reason why one of the first questions I ask founders when I meet them is, why are you doing this? And it always strikes me better if they're part of the space that they're pursuing, whatever sector, if they've been already part of the sector that they're working in. That's very important because they've seen problems firsthand and then they're trying to solve them. I think it's really hard. I'm not saying that anything can work. I'm not saying that it couldn't work, but I think it's really hard to just say, okay, I want to do a startup. Let me think what problems are there in the world. It's much better if you say, oh, I've had so much trouble doing this actual thing, and I found a way to fix it, to make it better, and actually, this might have value for others as well. Yeah. So I think it's better that the founder is embedded in their sector already from the beginning, from the onset of the idea stage or prototyping stage. And then, to answer the second part of your question, when should you start thinking about exit scenarios and who your buyer might be? I would say as soon as you have PMF, so you've proven that you bring value to someone, then it is a good time already to start thinking. And one misconception in different startup ecosystems, also in the Greek one, is that if you're doing great, buyers will come. If you're doing a good job, if you have good tech, buyers will follow. But I don't think that's the case. They might, which is great, but you might miss a wave as M&A comes in waves. This way you might miss a wave, be doing great, but miss a wave. Also, you might get a worse deal. If you just speak to one guy, to the guy that rang you up, you might miss the opportunity of increasing your value in the transaction. So I think it's very important to be strategic about it. Buyers don't buy companies that they met yesterday, similarly to how later stage investors don't necessarily invest in companies they heard yesterday. So after you find PMF, after you have a good value proposition for your customer, it's a very good day to start mapping your ecosystem and not going out there like I'm being sold or would you buy me? Obviously not. More like forming partnerships, alliances, and starting to meet these people. They have these roles called corporate development. They're up there in every large corporation, and these people, it's their job to find startup founders and start just speaking with them, seeing what they're creating, gauging the space. So it's not a negative signal to be reaching out to these people, just to introduce yourself and see what they're doing, what their way of thinking is, and present what you're doing. If anything, you could get a good commercial deal out of it.
Can I ask you maybe something on the side? And I believe that startup founders are not always necessarily famous for that. What about being conscientious about your legal structure, about your books? When you go after an M&A deal, you would go through a very thorough due diligence process. And I think this can create a lot of challenges if you haven't, if you don't have your army straight.
I can think of 2 or 3 founders that will not like my answer.
And this is why I'm asking you this, because we don't speak enough about it.
But it's the opposite. They would not like my answer because they've been in an exit and maybe they lost $500,000 or so because they didn't have their books in order. But to be pragmatic, when you start a company, you need to focus on one thing, and that is building. So for me, and I'm a banker, imagine, but for me, it's fine. It's fine not to be, extra cautious in the beginning, to do a mistake or two in legal. It's okay. You provide value, you create value, you create something out of nothing. Yes, your deal, you might lose in escrow or in DD 1 million or 2, but you have created a $500 million company, it's fine. You can lose $1 million because you didn't have your books in order the first year. I know a couple of founders that will disagree because their DD process might have been harsh, but that's my opinion. On the same topic though, that's why it's important for pre-seed and seed stage funds and investors like myself to help startups. That's a great value add of an investor, for example. You cannot run the business, but you can introduce them to the right partner. So oftentimes I think it's more useful for the founder, instead of saying, I will do 3 introductions to 3 different accountants, just say, work with this guy, he will have your books in order, don't look around, this is the person. So this is a great value add, I think, for an investor to have the lawyer and the accountant ready to match with the founder so that they don't need to, spend brain power on that.
And completely outsource it. Okay, what else are you looking at when you talk to a founder?
The first thing, as I said, I mentioned before, is their relevance to the problem at hand. Have they experienced it? The second thing, their passion for it and their expertise. So, okay, this is a problem, you've identified it correctly, can you solve it? So is there tech behind it? I like tech. There's 2 ways to make money in a transaction. One is revenue. So if you have a lot of revenue, if you have a good execution path, let's say, a founder that can execute very well. And the other way is to have good tech. So to have created something that is truly exceptional in terms of technology is usually covered by the founder's background. Like, are they the person to really be solving the problem that they've identified?
Okay.
And this also commands for better multiples in the market. So when you actually go out to sell the company, you can either sell a company based on the revenue it's creating, or you can sell it based on the technology it's created.
Yes.
And the multiples on the latter are oftentimes better than the first one. So that's why I look at companies with proven tech, a real technological advantage.
And founder problem fit, probably.
And then, exactly. And then a technical founder that can solve this problem with deep tech.
Okay.
So that's my first two, I say, milestones in making a decision. And the third one, especially coming from Greece and investing in Greek founders, I think it's important to find people that are ready to go the extra mile. And I'm saying that literally, to start writing miles, because you need to be traveling a lot. You need to probably move countries to create something big. It's very probable that a part of the team will need to move to the US to capture a larger market, to be traveling around Europe, capturing markets. So I think it's extremely important to find companies and founders themselves that have sort of global outlooks and that are ready and sort of also infatuated by the idea that they're going to have to be traveling around the world to realize their dream. So that's a third very important
Do you invest in
part.
diaspora founders as well? Because I
For
think
sure.
it's,
For sure.
especially the Greek diaspora
sure.
is amazing. Yeah.
But even in diaspora cases, I think they still have to be, because you can't, I mean, obviously with the internet, it's much easier to create a company wherever in the world you are, and it depends on the product as well. For example, a crypto company, I wouldn't mind as much, but anything that has to do with real world stuff, like hardware, for example, it's very important to be connecting to your users, so you still have to travel a lot.
Yeah.
So kilometers, miles play a role. Yeah, for me, they play a role in my decision.
Which are the red flags? What is a no deal?
Red flags, yeah.
Have you walked away from deals at, I don't know, stages where you almost invested?
I have. Yes, I have. I guess trust is important. That's the common theme there. So when you hear one thing and then you hear another, there can be a reason for that, but oftentimes it is sort of a red flag for the investor. It's important to be honest with investors and upfront. I do understand the reality that founders are selling to investors. So I'm not their friend, I get that. But still, when you hear one thing first and then another, I think that's the only red flag because as you build conviction for something, as you get into a deal, it's really hard to back out. And I think the only real reason why someone would back out is really a trust issue.
Yeah. Now, you've supported startups like Intric, right?
Yeah, Intric.
Yes. Arcwave, Neurovirt. What factors contributed to their success? How were you involved? How did you manage to guide them through their process?
Different things for different founders. I think as investors, we like to think that we help a lot, that we're helpful. But in reality, our job is providing capital. So oftentimes the founder won't need help. So I think it's also important to know what sort of help the founder needs. Do they really need someone very hands-on? Do they need you to engage and be very hands-on for a few months and then disengage because they no longer, for example, I'm usually very involved when they're running a fundraising process.
Okay.
It's also relevant to my background. So I am working very closely with them when they're in a process, but other times they're building their product or their customer, so then I can disengage. It's important to, touch base often because maybe you can help with things that they didn't think you could, but it's also important to be able to take a step back and let them do their thing. So different teams need different type of help. The common theme there again is fundraising. So I think someone with a background in VC, someone with a background in investing, they can obviously help them a lot in their next fundraising process. I've also been involved in product conversations, sometimes even, thought of features, which is, great for me, but I think for the founders, the most important help that they would say they've received from me would be on the fundraising side.
Have you ever had the feeling that maybe you're too hands-on, that
Exactly.
maybe you're too involved?
Exactly.
Becoming a good investor is also a growth curve, and it is also a learning curve. Exactly. Can you maybe share which were the first little failures or mistakes that you did as an investor, and I don't know, share the knowledge with those who are maybe now in the beginning of their investment career.
Yeah, for sure. Something that I'm constantly, catching myself, a trap that I constantly fall in and try to avoid, is thinking that you can do things. When you're an investor and you recognize patterns, you see an issue and you think, I can fix that issue, I can help them with that, you can't. So oftentimes, a problem that you may be seeing or a situation where you feel you can help with and you can solve it, that's not true, because the only way to actually help a startup overcome anything, a hurdle or a difficult situation, is if you're full-time.
Yeah.
So the investor is there for the advice, but it's not like you can solve things. So it's important to realize that you can't fix things. As much hands-on as you are, you can't really, you overestimate your influence on the startup's course. Let's say that. And another thing that I've changed from the beginning of my career, only now am I starting to do it, is realize that one of the greatest values that an investor can bring to a founder is to pinpoint the difficult stuff. So the stuff that you don't want to say, that will make you unlikable. The hard truths, let's say.
Okay.
I think that's one of the best value adds that an investor can give to the company. When they see something, going the wrong way, it's a responsibility. For the investor has a responsibility to take the founder aside and give them the hard truths. So this is something I didn't used to do. And only now I'm starting to
How do you
realize
expect then founders to react? Because I think being a founder requires you to be delusionally optimistic. So I talk to many founders and they somehow always come out with a prognosis, a prediction about the development of whatever they were now trying to do, that it's going to fly, it's going to run. And it's almost never like this. Not many of them think of contingencies. But at the same time, if they didn't have this, they wouldn't be in this game at all. Right. So how do you balance that? And especially when you invest in female founders, I believe that there is a different dynamic. What I've seen with female founders is that they're much more receptive to feedback. And at the same time, critical feedback tends to sway them a bit more from the course that they're actually taking.
That's interesting.
Yeah.
I haven't thought about it, actually. That's interesting. This goes beyond investing.
Okay.
I think it's a human trait.
It is.
You can be polite. No matter what you say to the other person, you can always be mindful and polite. So you can say hard truth, but when you've been with them throughout the course, when they've seen that you care, when you align with their vision, more importantly, when the founder feels that they want to get there and you also want to get there with them, and that you're completely aligned, then I find that they are more likely to accept this sort of hard feedback.
Okay.
I guess in terms of not swaying them from their course, that's also very important. But that's the very essence of founders, I guess, and that's what I like. The founders that really have conviction, that really know a sector. And I will never, I wouldn't try to give them feedback. I'll give feedback on what I know. I'm not going to give them feedback on their sector. For example, in Neurovert, what hospitals are going to do. I don't know what hospitals are going to do. So I would give feedback on how to handle long sales cycles, how to handle team issues, fundraising-wise, what we can expect. So this sort of feedback.
It's very interesting. I mean, the topic of coachability of founders always appears when I talk to investors.
Yeah.
And of course, in a way, they kind of expect it. And at the same time, it's very hard to be the captain of your ship. So in this kind of scenarios. So you have the investors who are obviously, you depend on them for a lot of reasons. Yeah. Their word has certain weight. They also have a great overview over the market. They see like different startups, they see different innovations. Their job is to analyze how what is the potential of certain technologies. So their opinion can be very, very insightful. If you're a young founder who is doing that for the first time, you might get scared away. And investors expect you to be coachable, but they also expect you to be the captain of your ship. And I would like to hear maybe your tip to founders who are in between the two states. How do you maintain balance in this situation?
First of all, for the investor side, I think it's a trap. I don't think investors can coach founders. Founders coach themselves, so their journey is so.
Can you recommend them coaches?
Of course, actually, yes. I have an excellent coach that I could recommend that I've used myself. But that's, I mean, not coaching in that very, strict sense. I do have a coach, though, but I don't think you can mentor or whatever. You can advise founders, but at the end, if they graduate to become a different kind of founder, that they do themselves. So it's on them to coach themselves, to get different beats from here and there. Knowing one investor can do that. On the founder side, when they hear feedback, always know the person giving the feedback, it's important to have aligned interests. So you mentioned dependence. You depend on investors. That's something very nice that I'm experiencing now with angel investing. They don't depend on me. I've given them a small check and then we're perfectly aligned. I can't support them even if I wanted to further. So that's it. That's all they're going to get from me. And then we're in the same ship together. So I just have the exact same alignment of interests as founders have. So we have the exact same goal and that's it, we're in together. A problem, for example, is when you bring in a very early stage, you bring a very big fund, like one of the top tier names. You have a party in the beginning, and then what happens if that fund doesn't invest in your next round? So yeah, that's, for example, a misalignment of interest. Another issue is with funds that have very spread portfolios. They're trying to diversify, they do very early stage, so it's understandable on the fund side, of course. But then on the founder side, if someone like sprays and prays, so look at the portfolio. If you see someone has 100 investments, 50 investments, how much time do you think they're going to spend on this one? Whereas where you see a more concentrated portfolio, and someone that does a specific stage, it's more likely that these people are going to hold your hand and you're going to have the same interests and you're going to be aligned when you hear advice. So always know where the advice is coming from and whether that person has actually spent time with you, understanding your vision, understanding your company, understanding your technology, knowing the sector. And then, you can weigh, let's say, advice based on that.
Now, I'm thinking that if you focus on angel investments, which are in the Greek ecosystem and in Greek founders, you must be a firm believer in the ecosystem. And at the same time, angel investing is a risky endeavor, especially at the stage that you're at. Now, for those who might be skeptics about angel investing and investing in Greek startups, and I'm sure that there are many, and they're confronting you, what do you tell them? Why does it make sense? Maybe not necessarily always financially, I don't know. Why does it make sense to write these tickets? Why does it make sense to support entrepreneurs at early stages and invest locally?
So I do invest in international founders as well, but I guess the theme there is the same. So oftentimes, you will see that business angels invest either in sectors that they've been in and understand, or it's ex-founders investing in other founders. So it is very sentimental. But in terms of, it's an investment activity. So if we treat it as such, as long as you diversify enough, obviously you're not going to be angel investing a portion of your wealth that is, indispensable for your day to day. So you take a small part.
What is the part that you would recommend, let's say?
I'm taking a lot larger part, and obviously if you're a professional investor or if you're an ex-founder, you will invest, you will angel invest a disproportionate larger portion of your capital into startups.
Because maybe you know more what you're doing. Okay.
Exactly. But even if you're prone to do it, you really want to do it. But even if you're an individual running a traditional business and want to get exposure to that sector, that's very normal as well. If you have the capacity, you can reserve a small portion of your wealth, let's say something below 5%.
Okay.
Because it is a risky business. But you do want to have that exposure because the returns you can get from angel investing can be also disproportionate. So you have high risk, but also potentially high returns.
Okay.
It's important to say that in these cases, you have to diversify. You cannot be doing 2 tickets in 2 friends. You should, spend some time and understand this game and do 10 or 20 tickets, smaller, 10 or 20 smaller.
Is it a numbers game? Yeah.
It is a numbers game, yeah.
Okay.
In the very early stage, you cannot expect, you can't reasonably expect that you will do 3 angel investments and one of them will work. You have to go above 10, if you ask me, for sure. If someone has some capital aside, then they're thinking, okay, I would like to angel invest that. Whatever that amount is, it can be high or it can be low. In any case, you need to divide it by 10 is the absolute minimum, 10 to 20 investments, so that you don't lose your money, basically. So that's important. And I think it's also important because angel investors have full-time jobs, so they can't focus like I do all their time in angel investing. So it is important to be doing things that you understand from your background or to be connected to angel groups in a way that you can, take advantage of other people's knowledge, other people's connections, and sort of invest like that.
Let's say you are ready to make this kind of exposure. When is it a good idea to do your own investments? Let's say through your with angel money or through your family office. And when is it a good idea just to put it with a VC fund who are going to manage it for yourself or for you?
Well, that has to do with how much time you want to be spending on this, how much you enjoy this activity of angel investing. Obviously, the more you enjoy it, the more you want to be hands-on and you want to have some money to play around with yourself. But I would, obviously, as with any other investment, I would spread it out. So I would do, half in VCs, and maybe I would reserve, I don't know, like of the total 100% that I want to spend in early stage investing, let's say, I would put like 60, 70% in the VC, and then I would keep like 20, 30% for me to angel invest with.
And what are the non-financial benefits of angel investing? Tell me about what you're experiencing.
No, I mean, this is a very unique time in my life.
Yeah.
I've been an advisor, I've been on the VC side, and as an angel investor, it's, as I said, it's a unique alignment of interests with founders. So it sort of helps me even more, get in the actual founder's shoes and see the journey from the very, very beginning, because I come in very early, obviously, as an angel. So yeah, it's perfect. It's really, you get a back seat in one of the most amazing journeys.
Aren't you a bit tempted to go and try it for yourself?
To become
build
a founder?
A startup? Yes.
You don't know how many times I've thought of it. How many times I've even said, okay, I'll just go there for a year.
Yeah.
Yeah, I have been tempted many times.
Maybe even invited, I can imagine as well.
Yeah. To join a startup. But yeah, no, I think for me it's always been, I don't know why, but I've always loved this sort of investor standpoint. I feel that I can maximize my impact in this world this way.
Okay. There are not many women investing in startups. There are not many women also in the VC funds, unfortunately. Do we need more women, first of all, who are on the side of an investor? Can they bring a different perspective? What is it that you believe? And how can we incentivize maybe more women to go into VCs? Because the way that I see it is also starting a virtuous cycle. Through investing, you can also start building your own wealth. Of course, you can do it also through entrepreneurship. But somehow the numbers of funded female founders go hand in hand with how many women we have also on the investor side. So we need to start doing it somewhere. And I think this is gonna, in generally, start creating a bit more wealth for women. Yeah. But let me hear your thoughts about it.
And this is a very important question. So I've always been in male-dominated sectors, like I'm a mechanical engineer, and then I was in investment banking. Trust me, even less women there. In industrials.
Less than a mechanical engineer?
Yes.
Oh wow! Okay, I didn't know that.
But industrials, investment banking, I would say even less.
Yes. Okay.
Yeah.
True.
VC as well. So I've always been in male-dominated sectors. Never wanted to be pictured as the one of the women there. One of the.
It's horrible. It's horrible. Yeah.
But as I grow, as I age, I don't know. I think it's increasingly important to address these topics, and not to just dismiss them by saying, "Oh, I don't know. I was always like I used to be in an even more male-dominated background." So
I must admit that I was, I don't know, anti-feminist when I was younger. And I have to say also that I found it very uncool to talk about these topics. And I was kind of like, what is the whole exaggeration about it? I don't see the problem. I'm in male-dominated sectors and I'm actually doing fine. There is no discrimination. And then I started reading about it. And I don't know, was I brainwashed or did I really start seeing that there is a bias? I mean, now I'm much more vocal about it, and now I don't feel ashamed anymore. Yeah.
So I go back to the math. Really, that's what I do. When philosophy troubles me, I just go back to the math. So I used to be like that as well. Like I was always like, I don't know what your problem is. Like I used to be in an even more male-dominated sector, but no. I just go back to the math. And the math says that, I don't know, it's like 50% of women out there in the global population. And what's the percent in these sectors? It's too small. So obviously, it's not working. So if you just go back to the very simple math, very basic math, there's obviously an issue.
Yeah.
And we may be normalizing it. We may be not experiencing it as individuals, but we are as a whole. I'm not very, as I said, pro quotas or whatever, because I've, gone through my career the hard way. So it's not, I'm not pro quotas. So this is not what I'm going to suggest either. I think what women can do and should do, because there is an issue, they should address it themselves. We should not wait for anyone to impose a quota and then whatever. What can you do? You want to be in investing. Let's say you're a woman and you want to be in VC and you don't find a way in. You want to be in investing, you don't have money to angel invest. Very pragmatic positions to be in. What do? Okay, be very good at one thing. There's different ways to come into invest. You can be a founder yourself. Let's say you don't want to do that. Okay, think of things that you're good at. Is it business development? Is it legal? Is it fundraising? You can advise startups. So we tend to think that you need to be rich to be an angel investor, because what you need to be in investing is a track record. You don't have access to a track record if you don't have money or if you don't have a job in a VC. So how can you create, that's the real question for me, how can you create a track record when you don't have one and you don't have the capacity? It's not true that you need to be rich to be an angel investor. You can do very small checks as low as 5K, and I will be specific because I think people need to be specific about this. You can also go lower than that. You can go as long as 2K. The founders don't care, because whether someone gives them 2K or 20K,
it's not going to move the needle.
It's not going to help them much, right? So if you're good at something, whether it is business development or fundraising or whatever it is that you can actually tech even, that you can actually, AI, for example, machine learning, anything that you can actually help the founders with, providing advice in that specific field, then they are more than willing to add low checks to their cap tables. So that's how you do it. If you're a woman, you don't wait for anyone else to do it, you do it yourself.
You can create value in different ways, of course. Okay, that's actually a great tip. What is the startup that you're still looking for that you would definitely want to invest? And maybe you want to see here, built by a local founder, by a Greek founder. Have you thought about it?
No, not really, because what I look for, I don't look for sectors, I look more for founders. Obviously, there are things that I know and things that I don't know in terms of sectors, but it's the founders' relationship to the problem that really draws me in an investment.
So it's not the technology. Okay.
That said, I think space is very cool.
Yeah.
So I would like to see a space investment come out of Greece in the next few years.
What do you think is the next nexus in your career?
Okay. Well, I've been angel investing full time for more than a year now. Been really enjoying it. So I've been through the M&A path. I've worked for a VC.
You're actively also giving back to the ecosystem. You're also an ecosystem builder.
Yeah, exactly. Like I've built a community. I've worked for another VC. Now I've angel invested full time. So I guess, the natural step that comes after that is to do this in a more scaled manner. So similarly to founders finding PMF and then actually scaling it. So I do hope that at some point, I can create even more value for the ecosystem from a more institutional point of view.
Well, I don't see you as someone who has glass ceilings. Obviously, whatever you have jumped into, you did it all the way, and you did it with flying colors. So I'm fairly optimistic. What would you give, or let me phrase it in a bit more political way? What do you think is missing in the venture capital ecosystem in Greece that the ecosystem goes to the next level? What maybe needs to be professionalized or done differently or done better? I mean, you've seen that from the inside. You're also now part of the ecosystem. You have a vested interest. You are obviously also co-investing with VCs.
We are maturing fast. We're growing fast as well in the Greek ecosystem, especially in the early stages. There is ample capital today, which is very good for founders.
Yes, it creates a founders market.
Yeah. Very, exactly. So it's very good for founders. But I think the next day for the Greek ecosystem is returns to private LPs. I think that's the next day for the Greek ecosystem.
Yeah. And
there's
what is the challenge here? What do you say?
So there is VCs have a long lifespan, let's say, than other investments. It's a very patient sort of type of investment.
It's a patient capital, yeah.
Yeah, but the time comes, the day comes when you need to have more exits. You need to have exits at better multiples. So you need to be exploring a bit the later stages as well.
Yeah.
So we see still more Greek founders, most Greek founders, if they're looking for a seed ticket, then okay, we said there's ample capital. But if they are looking for, let's say, 5 million, I don't think they can find it in Greece. Most likely, they're either going to go to a Greek corporate investor, or to an international VC. So we're starting to see an opportunity. I'm not going to say a gap. I'm going to say maybe an opportunity there for some funds to also focus on the Series A stage. But at the same time, for the seed stage funds, when we started back in 2017, I think the next day is returns. It should be returns.
Yeah.
As we approach the end of the life of the funds, we get to see, what we've been doing all these years.
That's the only way that you're going to incentivize private investors and LPs to invest a bit more in this asset class. This is very clear. I mean, what we're also discussing, and when we are comparing that, let's say, to different ecosystems, what's really going to move the needle is probably the pension funds. But
true. Yes.
This again depends on the returns that you're going to make.
For sure.
Yeah.
Not necessarily. It's again, there's a bit, in these emerging ecosystems, there's always a portion of educating the market, as we said, with founders.
Yeah.
We also need to do that probably with pension funds for sure.
Yeah.
we need to open them up to, and you don't need to reinvent the wheel there. Maybe all you need to do is just copy paste whatever the Ontario Pension Fund is doing. You just say, okay, guys, maybe you can do that. Maybe this much percent of your budget could go there. So for sure, that's one thing. And I would say also on the acquisitions front, on the next day of the acquisitions, and that's on a country level rather than just on a tech ecosystem level, not a startup ecosystem, on a tech ecosystem. But these two are obviously collaborative.
Yes.
It would be interesting for me to see this, the acquired companies, the subsidiaries that the acquirers have kept here in Greece, to see them grow, to give incentives to these companies to keep the workforce here and to even grow it, and to sort of gain these sort of R&D centers here in Greece from all these acquisitions that are happening.
Yeah, that's an important factor, which is helping you recycle the value and also the wealth that has been created. I think another one is definitely work with stock options for employees, because many of the companies that are being founded here, or at least they started from this region, they would have to move their headquarters to a different place, especially if they manage to fundraise later on with international investors. It will be often a requirement for them to move the headquarters somewhere else. So how do you then recycle the wealth that has been created? It is probably through the stock options for employees, where part of them will build some wealth, and then they can build their own companies with it. They can start investing in it. They can actually, support the growth of the ecosystem. Do you see that as a common practice amongst Greek founders?
Yes, I do. By the way, often you need to move the headquarters abroad, even before other investors come in, so that you can attract other investors, international investors, to come in. So this is very common practice. Stock options, I see more and more. I can't stress enough how important incentivizing your employees is, and I don't think anyone can do it enough. Like that's why vesting is there also. So someone is underperforming, there's vesting, there's a cliff in vesting. So it's not an excuse. I think it's super important to keep your people very well incentivized, and I have seen, for example, ex-employees that received, cash back from an acquisition, then becoming angel investors even.
Exactly.
So there's a lot of my fellow angel investors fall in that category. They were employees in successful Greek startups. So even if they don't go on to, create another company immediately, still they're helping the ecosystem through angel investments.
Yeah. Thaleia, thank you for this conversation. I'm very happy that you're so ready to share the knowledge that you have collected here, especially as an angel investor. If there is someone who would like to, get your personal advice on how they can develop a career in angel investment, what is the best way to find you?
They can contact me through LinkedIn. I do check my messages now and then. But if someone wants to get into angel investing, just pinpoint what you're good at, what you can help a founder with, and I think that's the most important part of the story.
Yeah. So it's not only about giving them capital; it also is all about creating value.
Unless you can give them 100K minimum, then it's not about capital.
It is about the knowledge that you can share.
It's about the value add. Yeah,
and the value add. Thank you, Thaleia.
Thank you.
And if you're just as passionate about innovation as we are, hit subscribe for the Recursive podcast on YouTube or your favorite podcast platform. We're everywhere.